Hey, I'm Andrew, and today we're talking about trucking insurance. If you have a small trucking business, or maybe you're getting ready to start a new trucking business, hopefully this video will be helpful to you. We're going to talk a little bit about the insurance that you need for your business, who the Federal Motor Carrier Safety Administration is, and what kind of requirements they need you to have in order to obtain your DOT authority, and how to operate legally as a motor carrier business as far as your insurance is concerned. A little bit of information about when you're hauling for different brokers, or maybe you're hauling for Amazon, or maybe you get your loads from a load board, what the typical insurance requirements we see from businesses operating in those spaces. And then we're going to give you a few tips on what you can do to lower your premium and how to save money as best as possible when you're shopping for trucking insurance. So the Department of Transportation has a kind of a subsection called the Federal Motor Carrier Safety Administration, and they put out regulations or requirements for trucking businesses to adhere to in order to operate legally. Now, your business requirements are going. The requirements for your business are going to depend on what kind of cargo you're hauling, what kind of vehicles you're operating, and where you're operating them. If you're hauling general freight, you typically are required to have $750,000 of automobile liability coverage. That is the minimum FMCSA requirement to obtain your DOT authority. Although more commonly we see $1 million limit, and I'll explain why here in a minute. On your trucking insurance policy, you need specific endorsements called filings, and these filings, what it is a form that your insurance company will end up sending to the FMCSA to prove that you have the specific requirement met on your policy as far as your liability insurance is concerned. And those can be federal filings if you're a federal motor carrier. Depending on what state you're in, you may also be required to have state filings for your liability and or your cargo. So it's important for you to know what requirements you have to adhere to. So speaking with your insurance agent and accurately describing what kind of cargo you're hauling is something that you need to do. Again, if you're hauling for Amazon or load boards, or working with brokers to get cargo to get loads, most commonly we'll see you have $1 million of auto liability. You have $1 million per occurrence, $2 million aggregate limits for general liability. Depending on the specific type of cargo you're hauling, you may need higher limits of insurance for cargo coverage, but usually $100,000 is what we see as a minimum requirement on your cargo insurance. And again, that is insurance for the cargo, the material that you're actually hauling while it is in your trailer or hooked up to the back of your truck. If you are using somebody else's trailers, typically you will have to provide the insurance on that trailer while it's hooked up to your truck and you're driving it down the road. Call that non-owned trailer physical damage coverage. Or you may have a written trailer interchange agreement in place with a vendor hauling their trailers, and then they'll want you to provide insurance on those trailers while you're using them. And then if you have employees who are driving for you, you need workers' compensation insurance, and you may need a commercial umbrella insurance policy as well. If you're hauling cargo that is refrigerated, such as food and beverages, it's important that you have a refrigerated endorsement, or sometimes referred to as reefer coverage, on your cargo insurance. And then, if you're hauling very expensive cargo, such as vehicles, or could be a variety of things, you need to make sure that you have an adequate limit. When you are purchasing insurance, you want to do everything that you can to make sure that you're reducing your premium, but still maintaining an adequate amount of coverage. We see typically small trucking companies for anywhere from 1 to 10 units, at least here in Indiana and Illinois, anywhere from $5,000 per truck per year up to $30,000 per truck per year, and there's several different things that impact that premium. Probably the most important thing is having quality drivers on your policy. Drivers that have experience with a CDL license, that have clean motor vehicle records, and who have a track record of operating that equipment safely. And then for an existing business, of course, maintaining a good track record year after year of not having insurance claims is going to be a huge factor when your policy comes up for renewal. If you have insurance claims, especially ones involving serious motor vehicle accidents, those can be large insurance claims. You see every billboard out on the highway is targeting attorneys targeting trucking companies to sue them and getting insurance money. So that is part of the reason why trucking insurance is so expensive. But by avoiding claims, you're going to be in better position to negotiate a price with an insurance company in the future. A lot of the companies these days are offering discounts for sharing your electronic logging device data. Anywhere from a 5% discount all the way up to 20 and 30% discount you could possibly get on your trucking insurance by enrolling in a program to share that ELD data. Some of the insurance companies are also now offering discounts for having cameras in the trucks. Sometimes they have to be forward and rear facing, or sometimes they could just be forward facing. It depends on the particular insurance company. And then particularly for trucking businesses that have a few units or are a little bit bigger, having a real safety and risk management program, and that could involve things like offering incentives to employees for safe driving and having an incident reporting procedure. And there's so many resources out there for trucking businesses to get free material to do training and safety on with employees. And then when you do have those inspections, those DOT inspections, and every time you get pulled over, that information all goes to what's called the Central Analysis Bureau, and you have a CAB report, and the insurance companies look at that report and they can see violations and maintenance records and things like that of the vehicles, and those all have an impact on your insurance premium. And then kind of the final tip is, if you can, pay your premium in full for the year. Most of the companies offer a paid in full discount. Sometimes it can be 10% of the premium, which can be many thousands of dollars. So if you prepare for it every year and you understand how that works, you can take advantage of that. I hope this video was useful to you. If you have any questions, you can reach out to us at briggsagency.com. Thank you.